Ladies and gentlemen, welcome to our weekly investor update. I'm your host, Rachel Curlew, AVP of Investment Banking. We're happy to bring you another investor update. Joining me today is Justin Scott, Investment Banking Analyst, and my co host for today.
All right, thanks for that, Rachel. Glad to be here.
On today's episode, we will be discussing Caribbean Producers Jamaica Limited and Fontana Limited. If you like the content, don't forget to hit like and share this video. If this isn't your first time here, then be sure to subscribe and hit the bell to receive all notifications. We upload content like this once per week. Also, if you're ready to embark on your first investment journey, you should take that first step with Mayberry. Follow us on social media to learn about how you can get started today. So, the usual, I'll kick it off with CPJ, then I'll hand over to Justin for him to do his review on Fontana. CPJ is a leading company in Jamaica's food and beverage sector, focusing on import and distribution of various products such as alcohol, non-alcoholic drinks, food items, and consumer goods. They operate as a key player in supplying hotels, restaurants, retail outlets across Jamaica and St. Lucia. I would estimate that CPJ holds a market share of over 50% in the local sector, combined and poised to grow even further given Jamaica's current tourism climate. Tourism is booming. We're projecting to receive approximately 4 million stopover visitors for the year. And the government has also indicated that over 8,000 rooms are slated for opening over the next 5 years. This is actually a US $4 billion investment. This potential growth in the hotel infrastructure could significantly benefit CPJ's business operations and overall market dynamics. So, a lot of things happening in the tourism sector, and CPJ has a direct correlation here, so we can do the math. So let's jump into the financials though to see how they're tracking year to date. For the 9 months ended March 2024, the company reported a 5% increase in gross operating revenues, reaching 112 million US compared to 107 million the previous year. Cost of operating revenue also increased by 4%, leading to a 7% boost in gross operating profits to US 33 million. Despite the 7% rise in expenses that we're seeing here, CPJ's operating profit increased by 17% to 8.8 million US dollars. It's important to note, though, that last year the company recorded a one-time expense of 1.5 million. So, adjusting for this, operating profits would remain relatively stable year over year. After accounting for an 11% increase in finance cost, CPJ reported a pre-tax profit of 6.2 million US and a net profit of 4.7 million. This results in a trailing EPS of 99 cents when compared to the current stock price of $8.81 Jamaican. The company has a PE ratio of nearly 9 times, which aligns with the main market PE range of 9 to 10 times, suggesting that the company is trading at a relatively fair value. Examining the balance sheet, the company's total assets are up to 101 million US from 86 million reported last year. This was driven by an 8 million increase in cash and a 3 million increase in property, plant, and equipment. We're seeing here that shareholders' equity now stands at 37 million US, a 24% improvement. Moving to the next slide, we are seeing a significant improvement in Q3's profit compared to last year, which is encouraging. Over the past 4 quarters, we're also seeing that the company has consistently achieved quarterly profits exceeding 1.2 million US, despite the ongoing supply chain challenges and logistics issues they've been citing in their management discussions. They recently opened a new store in St. Lucia, also enhancing their presence in that market. Overall, the company is showing strong performance year to date. CPJ's trailing revenues are now at US 147 million, with trailing profits nearing 6 million US, which translates to almost 900 billion Jamaican dollars. As I mentioned earlier, CPJ is well poised for growth, particularly given the expected addition of 8,000 new hotel rooms over the next few years. This development will greatly enhance CPJ's business operations, leading to increased demand, expansion opportunities, stronger partnerships, and ultimately growth in revenue and market share. And speaking about partnerships, it's now public information that Mayberry sold its 20% stake in CPJ. And we would have also seen in the news that AS Bryden's acquired a 44% stake in CPJ. AS Bryden operates out of Trinidad in a similar sector as CPJ. AS Bryden is owned by Seprod, led by Richard Pandowi, which in turn is a part of the Muson Group, headed by PB Scott. So, this brings a strong management team with extensive experience. Mark and Tom have done an excellent job growing the business, and I'm confident that the Muson Group can elevate the company to the next level. This acquisition not just brings management expertise, but we can expect stronger distribution channels, broader product offerings, increased market presence, synergies within the group, and ultimately, growth opportunities. So CPJ is a stock to watch these next few quarters. The key stats table on the first slide shows a 52-week high of Jamaican $13.89. So, I think it's reasonable to expect that the company can reach this price again within the next few quarters. What are your thoughts, Sir Justin?
Thanks for that, Rachel. I'm very much interested in CPJ. You brought up a whole heap of great points earlier. I'm very much interested, especially going forward, in the synergistic relationships between CPJ, Seprod, and AS Bryden, considering how intertwined these companies are and the different avenues that they have to explore going forward. I'm especially interested in the relationships that can come across that can benefit CPJ, especially considering the company's, soon to be new owner, PB Scott, made a proper remark on taking advantage of the storage and the cold storage, especially that CPJ has. Because I don't know if everyone is aware of it, but CPJ has almost 150,000 square feet of cold and dry warehouse storage. That's about 3.4 acres worth of storage that they're able to take advantage of and more maneuver all of the different goods, products, and things through these three entities to really take advantage of the booming tourism that we're experiencing, especially considering that we've gotten over 2 million stopover arrivals in 2024 alone, and we still haven't closed out the year yet. We still haven't arrived towards the winter season just as yet. So I think we're going to expect, especially considering that we have a whole lot of high performance events coming across from October right until the end of the year. So I'm expecting a whole lot more tourists and people to come across. And all these things will require proper supplies of goods, alcohol, liquor, food, and people to provide this food to the tourists. So I'm expecting a whole heap of great things from CPJ, expecting a lot of great things from the sector, especially now and going forward. So I'm very much aligned with you on that, Rachel.
Thanks for that, Justin. Hopefully they can, address quickly the supply chain and logistics issues they're facing to capitalize on these opportunities that are going to be presenting themselves. So now let's move on to Fontana. Justin, over to you.
All right, ladies and gentlemen, moving on. Next company is Fontana Limited. So Fontana Limited listed on the Jamaica Stock Exchange and the junior market in 2019 at around just shy of $2, and since then has been really ballooning in terms of its value. A lot of people recognizing it, especially considering that it's somewhere that is so near and dear to the actual people on the ground shopping that it only makes sense for them to be buying on the stock. And let's tell about the financial performance now. So the revenues for the year have increased 11%. From $7.3 billion to $8.1 billion, gross profits have gone up in turn by 16%, from $2.6 to $3 billion, while admin expenses have increased by 28%, very much likely encompassing the increase from the brand new location in Portmore, which opened in November 2023. So we'd have really just been seeing about just over 6 months worth of progress from that Portmore location. But as you can see from the 11% increase in revenues, that is gradually upticking, and I expect that things are going to level off a bit more with the admin and the other expenses in this time period as they get a bit more on the footing, and all of those back contracts and all of these back payments have been sorted out and cleaned up. Selling and promotion expenses have decreased by 21%, reducing the amount of marketing expenses. Operating profit is down 7% from that increase in expenses to $696 million, while finance and policy costs have gone up by 4% to $204 million. Finally, from there, we get profit before taxation to $629 million, a decrease of 4%. And the net profits are down 10% in turn to $589 million, resulting in an EPS of 47 cents. Taking a look at the balance sheet now, the total assets are up 11%, up to $5.6 billion, while total equities are up 19% from $2.4 billion to $2.9 billion in equity, while total liabilities are up 3% from $2.6 billion to $2.7 billion. Looking at key statistics, current price is at $7.79 with a PE ratio of 16.5 times. It's a little bit rich for the junior market as it is right now, especially considering that we're in a bit of a teetering position where a lot of the prices on the junior stock exchange have been sitting over the last couple of months. So I'm expecting that the Fontana share price should continue around where it is for the next foreseeable period until we can get profits back up to where they want to be. But we can talk about that a little bit later when we get to the share prices. So trailing earnings are $589 million with a trailing EPS of 57 cents. With a 52-week high of $11.78 and a 52-week low of $7.20. It's not too far up, just a couple percentage points up from the 52-week low, kind of reflecting that rich PE that is trading at right now, with a market cap of $9.7 billion. All right, so moving on to the quality of profit movements, as you can see over the last 2 years, the thing that stands out to you most immediately is the Q2, which is their December time period, which is typically over, well, back in 2022, that was around $250 million, but that's now increased significantly to being at base $320 million for that quarter. Going forward, it's a bit of a, you can tell there's innate seasonality in the nature of the business, as you can imagine, but the Q4 is typically one of the more stable yet weaker quarters, doing about $90 million for the June quarters. But you can see it's a very consistent company. Well, it's consistently seasonal. That much I will say. And now moving on to the stock price history, it's teetering between the $8 to around the $10, $11 region thereabouts. Very much consistent in terms of the movement. It's trading within that nice tight band, with about $7.6 being the base typically. We've seen a whole lot of share movement since around July 23rd, where over 1 million units have been trading intermittently. Once it gets to about that $8.10 price range, somebody's very intent on selling or at least maintaining the stock price at around that price region. So anywhere between 7.6 to around $8.10 is where that band has been maintained over the last couple of months. I expect it's going to continue in that same liquidity period right there. So I'm expecting a lot of great things from Fontana over the next couple of quarters or the next couple of years, especially as they continue to expand. They have a lot of cash on them, so they could go on even further to expand their amount of operations, increase the amount of branches. I have no issues with them in terms of the operation. But as far as it goes to maintain or increase significantly their profitability to take advantage of their market share or to continue expanding the way they like, I'm not fully convinced that Fontana is where it wants to be at the moment to really push the share price to where we would like to see it, especially as I return to over a $10, $11 price region where we really want to see Fontana going to really take charge and push as one of the larger companies that we're seeing in the junior market. Rachel, any thoughts on Fontana?
Thanks for that, Justin. Fontana, or what I like to say, Fontana Pharmacy, remains a trusted name in the industry, and it's essentially my go-to shop for a variety of products. They're even embracing their e-commerce platform, catering to online shoppers like myself. But over the past 5 years, the company has achieved a compounded annual growth rate of 16%, which is impressive double-digit growth. They have several locations, I believe 7. They're averaging annual revenues almost $1 billion, at a price of $7.79 and a PE of 16. It's slightly overvalued, but I think they'll go into this valuation in the next 4 quarters, if they continue to expand their brand and presence across Jamaica. You alluded to the fact that they have a lot of cash on their balance sheet, so we're hoping to see a few more locations or some strategies to grow growth within the next few quarters. So let's see if the company can hit that high of that 52-week high of almost $12 we're seeing here. So let's watch this company over the next few quarters. And that's it for today's discussion. I'd like to thank our viewers for tuning in today. Your support is always appreciated. Also, thank you to my co-host Justin for contributing to today's discussion. If you're curious about updates on our virtual investor forum and updates, then find us on social media. We share our live stream dates and upcoming guests on our official social media pages. Give us a follow and stay on top of all things forum related. Also, don't forget to subscribe to our YouTube channel, Mayberry Investments Limited, and click the bell to receive all notifications. Keep safe and remember, wise investors, slow and steady wins the race. Thank you.